So exercise 3, we've got this information for Daddy Drugstore, and we're going to journalize the purchase transactions for them as well. Okay, so first one is March 2nd. So March 2nd, Daddy buys $20,250 worth of inventory on account with credit terms 315 N30 FOB shipping point. So you remember from the lecture, if we have FOB shipping point, that means that we are paying the shipping, the buyer is paying the shipping, okay? Because as soon as it leaves the person who's selling it warehouse, it belongs to us, okay? So we're paying for that cost. And anything we pay for shipping or freight cost gets added to the cost of our inventory, okay? Now, if it was FOB destination, that would mean that the seller is paying the shipping, and we don't own it until we actually receive it, okay? And that would be a selling expense to the seller. So first off, let's look at this journal entry. So we're buying inventory, so we're going to debit inventory for $20,250, and we're going to credit, it says on account, that means we're not paying it yet, so we have accounts payable $20,250. All right. Next transaction is March 3rd. We pay $90 in freight charges. Since we're paying the shipping, that gets added to the value, the cost of our inventory. Okay. So we're going to debit inventory for $90 and credit cash for payment of the freight charges. Okay. So shipping expenses get added to the cost of our inventory. All right. Then we have March 8th. So March 8th says Daddy returns $5,000 of the merchandise due to damage during shipment. Okay. So we're returning merchandise. So again, we're going to reduce what we have on our accounts payable because we're not going to pay for merchandise that we're returning. And we're going to reduce our inventory account by the amount that we're returning. All right. So that's our next journal entry. We're going to need some more here. All right. Then we have March 14th. So March 14th, it says that Daddy paid the amount due less the return and discount. So let's look over here. So we started out with $20,250, but we returned $5,000. So that means we have a balance in our accounts payable of $15,250. Okay, so that's what we're going to pay. Now, it says we got a 3% discount if we paid within 15 days. So the 14th is within that period, so we're going to get a 3% discount on this balance. So I'm going to see what 3% is. So this is my discount. This was the balance in accounts payable. And what I'm actually going to pay in cash is the difference between the two. Okay. So up here, I know I want to get the entire balance of that accounts payable off of my books. So I'm going to debit accounts payable for the $15,250. All right. And I know I'm going to pay out cash of the difference between the $15,250 and that discount of $457.50. So I'm paying out cash of $14,792.50. Okay, so then my discount, we need a credit to make our debits and credits balance. So $457.50 is what my discount's going to be. And my discount goes to merchandise inventory, okay? Because I want what I'm actually paying to be the balance in my inventory account. All right, so the inventory actually cost us $14,792.50. Okay, because that's what the difference between our balance and our discount was. That's what we paid in cash, and is the cost of the inventory. All right, so that's problem number 3. If you have questions on that one, you can send me an email or post them in the discussion board. Okay. Now let's look at number 4. So number 4 down here, we're now going to look at sales transactions. Okay, we're looking at sales transactions for Thomas Sportswear, and we're going to record the journal entries for a sale.